prices rising, inflation is evil for our savings because the dollar in your bank account is worth less in a year's time. It's currently worth 8% less, which is quite a lot. And so it's this weird situation where we have to take the pain. We're told we can't buy as much, and we're forced into it by rising our mortgage costs and our food costs and all of this stuff. And eventually things will slow down, people will be put out of jobs a bit, that kind of stuff. And then the overall demand in the economy comes down and prices come down. So we're all collectively taking the pain for this inflation that was created out of a whole bunch of different things.
Hello and welcome to Wealthy Value. In today's video, CEOs and co-founder of Real Vision and global macro investor Raoul Pal updates about the current Bitcoin markets and the growth opportunities for new investors diving into the cryptocurrency space. Raoul also speaks about the changing world order, high inflation and rising interest rates, and why US is the most indebted economy in the world history. Make sure to stick around till the end of this video where Raoul Pal explains the reasons for making a huge bet on Bitcoin and his thoughts on volatility in the space. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
So to put it in perspective, the US is about 25% of the global economy, yet they have 100% equivalent of global GDP in debt. So this is the most indebted economy in the history of world economics in terms of global debt, because it's so big. Now, the US is not the only one here. Europe's got massive debts. Japan's got massive debts. So China's got big debts. Everyone's got debts because we borrowed for our future selves. So leverage works in crypto that you have some Bitcoin and you want to borrow some more Bitcoin or some US dollars or whatever it is you want to do. So you will pledge your Bitcoin and your interest payments
as collateral.
And your interest payments are whatever they are. But what happens is if the collateral falls and the exchange or whoever it is, or the DeFi protocol says, oh, it doesn't cover the amount, you get liquidated immediately. There's no negotiation, no, oh, please, no, nothing, just like boom, out, and you take the loss. My framework is this is a long-term trend, right? We've got at least another decade in this, at least, probably 2 or 3 decades. But this part of it is going to continue to do very well. Sure, Bitcoin over time, as it gets more users, more adopted, it won't go up as much each cycle, but there'll be plenty of others and plenty of opportunities. So what we should be doing is using this, thinking of the money you've put in as your retirement money and writing it off. And then just adding, if you've got money in a bear market. Now, the problem is most of us don't in a recession. But a friend of mine taught me very early on, he said, Raoul, there's a key thing I've learned is he who has cash in a recession is king. So that's that combination of income and opportunity. You've got income, you've got some cash, and now everything's on fire sale prices. You're the king. If you were lucky enough, like you and I, to have bought slightly earlier in the cycle, then for goodness sake, don't look at your loss of wealth from peak. That's stupid. That's the American dream, fixating on something that doesn't exist. Think, okay, fine. I'm still in. I'm probably still up. Don't think, oh, my net worth's down 50%. This is the end of the world. No, that's not how it works. How it works is you need to be in it to win it. And you can't be in it to win it if you've got leverage or if you're out of the market. And so if you say to me, well, that's difficult for people, sure, then put less in. It's as simple as that. You get to the point where you can sleep at night, then you've got the right size bet. And once you have made money and it's compounded, then don't look at it from the peak to trough. So one of the tricks I've learned with myself in a slightly different thing is wine. I love wine, and good wine is expensive, but it's a lot cheaper if you buy it early, i.e. when it comes out. So I bought, and I've just taken a delivery of stuff I bought 15 years ago. Now, what I do is this little mental trick, which is I write off everything I pay for wine when I buy it. because I don't see the wine for 15 years, so why do I care?
Whoa.
And so mentally, it's gone to zero. So now I'm able to drink wine which I would never open because I haven't paid for it. I wrote it off. And it's really helpful to use mental tricks on yourself to stop yourself doing things you shouldn't be doing, which is selling at the low, buying at the high, or buying a bunch of wine and then not being able to drink it. And you actually buy it to drink it. I don't sell wine, but if I did, I would have just sold all my wine. I've never have tasted amazing wines. It's these mental tricks we have to play. I wrote the first kind of macro strategy paper about the valuation of Bitcoin. I thought this could be worth $1 million, and let's assume I'm an idiot by 90%. It's still worth 100 grand. So this is the best bet I've ever seen. So I held on, and then it fell 82%. And I'm like, wow. But I'd taken the bet, and I put money in, was not levered, and I could afford to take the bet. So I just thought, I'm just going to forget about this and just see, because this is a longer term thing, and you don't normally make money that fast, and it doesn't normally fall this fast. So let's just see. And then I kind of forgot about it, 2014, and then 2015 starts going up again. And then by 2017, I'm now mentally scarred from an 82% drop, coulda, woulda, shoulda. I then see confusion in the market about either we're going to fork Bitcoin to two different chains. The price is 2,000. I'm now up tenfold. I'm a genius. My macro bet has paid off, sort of. I sell out. It goes up to 20,000 in 3 months later, and I don't mind. I don't mind because I've made 10 times my money. What I did was deviate from my thesis. My thesis was this was a 10-year bet. And I took the money off the table within 5. And then I went back, and then obviously I bought back in June, May, something like that, 2020, and had a good run and put more money into it than I had originally in my original bet. And I worked out that I had, as opposed to just holding my original bet, I used a theoretical number. So I think it was, if you put 10 grand into that first bet, it would have been worth 1.4 million.
Whoa.
By doing the right thing, buying reasonably low and selling reasonably high, and timing the market. That was a small fraction. It was, in fact, I think I made 20% of what I would have meant if I held on.
Whoa.
And then I went back and looked at, okay, well, what did I actually do? Because I massively increased my position in June. I still underperformed by 5x. And then I went, okay, what happens if I'd done the right thing? What I should have done, which was my framework, which was you buy it when it's on sale, when there's blood in the streets. So I went back and looked at the bottoms of the bear markets, assumed I'm an idiot and I can't catch the bottom of the bear market and miss it by 30%. And just put the same amount in each time that I started with. That 1.4 million would have been 30.
Whoa.
Oh, sorry, not 30, sorry, 3.
I was going to say, good Lord.
Had I rolled my profits in, had I just doubled down each time or whatever, the numbers go exponentially larger. And that really stopped me in my tracks. You distance yourself from price action. Because your theory is that it's going to go from here to a lot further over time. That key word is over time. And we've all of us have said, and we know it does this a lot on the way. So then, if you know that, it's a known, why the hell when it happens, do people forget? It's so funny, when Bitcoin and ETH crashed last year, fell 55% from the high, I spoke to my wife and I'm like, God, everybody's freaking out, And she's like, why, what's happened? I said, well, it's down 50%. She said, but you said that's normal. And her exact words, so just shut the fuck up. You should be buying here, not freaking out. I'm like, yeah, true.
So, what are your thoughts about Raoul's perspective on Bitcoin volatility and market structure? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.